So welcome. This is week 34 of the COVID series at Genus. My name is Leslie Cliff. I'm one of the co-founders. I'm here with Wachell, our CEO, and the other co-founder. So this has been an amazing week that the US election has finally happened. It's not quite over yet, but it did happen on Tuesday. And so Wayne, really robust market this week. How did you see it?
Well, I think the fat lady has sung. It looks like Biden's going to win, and the Republicans are going to hold the Senate, and the Republicans probably pick up around 10 seats in the House. And I had concerns prior to this election about all the things that were going on, a move towards more socialism and defunding the police and those kinds of things. But to me, the center held, and that's great news, I think, for capital markets and for everybody. The center did hold. And from that, we saw, I'll make a few points in terms of things that events or individuals who are the winners. And looking at this here, the big tech is probably the winner because they're not going to have anybody going after them for the next 4 years, I would say. And we're going to see less government spending. And because of that, it's going to be more of a growthy type market, which will also help the tech sector, I believe.
Wayne, why do you say less government? They're going to have to do a big stimulus bill, and
no, we're not. We're going to get a skinnier stimulus bill than we expected. Now,
Trump would have done a bigger one than Biden.
No. We thought we were going to get a big one with Biden, and it's going to be skinny now because the Republicans are going to be there in the Senate. They're going to hold it back, right?
I see.
So it's going to be a skinnier. I'm hearing numbers rather than $2 trillion, maybe $1 trillion. The Georgia race, they have a runoff going on in the Georgia Senate race, and that might impact things as well. But it's going to be less money spent. And when you have government gridlock, you always get less things done, right? So it's status quo. So coupled with that is going to be no increases in tax, which the market likes. It's probably about 150 points in the S&P. So that's a good thing. And another winner was China. Just in terms of, Trump was very belligerent to China and tough on trade, and we don't think Biden will be, that tough. They're still concerned about China, obviously, but the Chinese yuan was going down when Trump was winning and just took off, and when Biden came to the front. So, and from that, we also saw the bond yields dropped based on less spending. Of course, the yuan went up, and gold started taking off as well, because gold was going up as well, we think, because Jay Powell said, look, if there's not going to be any money coming on the COVID package, we'll ease more. And also because what's going on with the COVID as well, with the outbreak in Europe and in the US. So all those things are leading into this. And so that's where we sit right now. Things may change though.
I'm probably, the whole world is just happy that the center has held. You don't want far left or far right. I'm curious, Wayne, what you think. Trump was moving towards appointing his own people to the Federal Reserve. How do you think, will the Federal Reserve retain its autonomy going forward?
Oh, I definitely think it will. I think, and Trump tried a lot, and really, many of them were shot down, right? So he didn't have his way, and I think because a lot of the Senate jumped in, and the Senate really has acted like the adult of this whole thing. It's been really Sean, I think, through the whole piece here. So they did protect the Fed.
Let's get back to the Fed for a minute. This is a longer reaching question, but the gap between we need to remember more people voted for Trump this time than last time. There's a serious problem in the world and America on the gap between the wealthy and the not so wealthy. And this deflation, low interest rates since 2008 has not helped the worker in America. It's helped people who have assets, but people who don't have assets haven't benefited. What policies can help with that?
Well, it was happening prior to the pandemic. They were starting to actually get big increases in wages in that lower income demographic. And we did an interview, I'm not sure it was with you, with someone else, a couple of months ago. And I was talking about a woke Jay Powell. And he came out in this incredible interview and said that, look, we have to get unemployment down, down, down. And that's when it really has an impact on those lower demographics.
Don't stop inflation once it starts to come.
Yeah, and what happens in the past 10 years, the Fed isn't much to blame as anybody else, because they would actually start putting the brakes on when inflation started going above 2%. Well, you have to let it go much higher to have an average of 2 over the longer term. So I think they've learned their lesson. They made mistakes. They've overestimated inflation. And I think they're going to let the economy run and keep it going. And they also see that as an issue of equality as well in terms of income. So they're going to make this happen. Well, they're going to try and make it happen. So Jay Powell is woke from that perspective.
Yeah, that makes me feel good too. Now, when we talk about the COVID losers and the COVID winners, and we know our dividend fund is full of value stocks, industrials, financial, consumer discretionaries. It's really the COVID losers. They're not thriving yet because of the COVID environment. And then we have our CanGlo fund that is more growth. It's got more of the technology, more healthcare. At that different weights in those different sectors has meant that they perform differently. But portfolios own both these funds. So we have a bit of a barbell going on. And is our strategy working, Wayne? How do you feel about it?
Well, at some point in time, the sun is going to shine on the dividend strategy. It will. The seeds have been sown.
Value stocks.
The seeds have been sown by the Fed. Longer term, like a year out, the amount of money that's been printed is going to have an impact on the economy. And we're going to slowly get through the turbulence of the COVID. And the numbers that came out today were very good. The employment's doing quite well in the US and in Canada as well. So I think we're on our way, but we have these issues along. And when that happens, value will do well and growth will slow down. And
in the meantime, just to remind clients, you do have a barbell. You do have a growth portfolio that's perfect. You don't have a solid value portfolio. You have a part of it. And that value part earns about over 3% dividend yield, which is much better than a GIC portfolio. So you're getting paid to wait for this value trade to kick in. Well, Wayne, that's really about all I had. I just am so happy that the elections turned out to be the center is held. I think that's great. I think there's some good things to be happy about. And, COVID is so disturbing in its creation of such uncertainty for all of us that it's great to have some good news. And on that note, we are going to end the COVID series of weekly videos at Week-34, something I've been advocating for months now. But we are not going to end the Friday market insights sessions. So we're going to keep these up because we've had such terrific feedback from our clients. And so we really welcome the opportunity to serve you and keep you in the loop. And this has actually turned out really by accident to be a wonderful client service tool. And so we're going to keep it up, and we do like introducing you to the next generation of Genus. So we'll keep that up too, but please send in your questions. We really appreciate it. And any positive feedback we appreciate too. So Wayne, I'll let you go, but enjoy our sunny weekend in Vancouver. And thank you very much. We'll see you next week, but it will be the Friday Market Insights series. Thank you very much.